This is Kelly Blackburn, the Human Resource Business Consultant here at Morrison Garritano. As most of you have heard, California COVID sick leave is back in action, and this update will examine how to get your compliance processes up and running. While the new legislation is quite similar to last year's California Supplemental Paid Leave, otherwise known as SB 95, which expired last September, there are some notable differences this time around. In today's update, I will be discussing what California employers need to know about this new supplemental paid leave requirement and how you should get prepared. So what do employers need to know? Well, on February 9th, 2022, Senate Bill 114 was signed into law and is effective immediately, retroactive to January 1, and expires this September 30th. And businesses will have until February 19th to get prepared. Like SB 95, the new law applies to employers with more than 25 employees, and the law provides up to 80 hours of sick leave for full-time employees. However, SB 114 is different in that it establishes two buckets of up to 40 hours of leave for different purposes and with different requirements. Employers will also need to comply with two notice requirements, including establishing a line item on an employee wage statement to note hours used and post the required California Labor Commission model notice, which we expect in the next day or two. Next up, who's eligible? The new legislation states that all employees, including temporary, seasonal, are eligible for COVID sick leave regardless of service years. Max benefit allowance is based on a full-time employee who can receive up to 40 hours in each bucket, max capped at 80 hours. All other non-full-time employees, for example, part-time, temporary, seasonal, etc., are eligible for prorated amounts based on the total number of hours they work in 1 week's time. For varying scheduled workers who have worked with the employee for at least 6 months and or more, an employer must pull a 6-month daily hourly average and apply 7 times to this amount to determine their bank allowance, which applies to both buckets. For those that have been employed less than a week, paid sick leave is equal to the number of hours they've worked to this date. And again, there is no length of service requirement to be eligible for this leave entitlement, and employees must have immediate access upon hire. So the regular rate of pay is different under SB 114 as compared to its predecessor, SB 95. Under SB 95, employers had to utilize a rate of pay that was the highest under several different calculations. Thankfully, SB 114 simplifies things and determines regular rate of pay utilizing the following calculations. For non-exempt employees, it's calculated in the same manner of regular rate in a work week, calculated by dividing the employee's total wages, not including overtime, divided by the total number of hours they've worked within the last 90 days. Exempt employees are calculated in the same manner in other forms of paid leave, with legislative caps in the amount of $511 per day and or $5,110 max benefit. As mentioned earlier, employers must set up two buckets. The first contains up to 40 hours and can be used for any of the following 7 reasons, to include an employee themselves are subject to a quarantine or isolation as regulated by CDPH, CDC, or by a healthcare provider. They're personally attending an appointment or attending an appointment with a family member to receive a vaccine or a booster, and then unfortunately experience symptoms related to that vaccine and booster, or they themselves are experiencing symptoms similar to COVID-19 illness and are seeking a diagnosis, caring for a family member who they are also quarantining and isolating in the home, or caring for a child whose school or place of care is closed and impacted by COVID-19 on the premises. Here's where things get a little different. The additional second bucket of up to 40 hours can be accessed by an employee in the need of additional time if they've exhausted all available hours in bucket 1, are experiencing any of the qualifying events listed and mentioned previously, and supply proof of documented COVID-related reason. That's the big difference here. Employers can require documentation for the covered employee for test results, They also can require such proof to be provided at no cost. And if an employee refuses to supply the support documentation necessary to access bucket number 2, the employee is no longer entitled to this time and their leave would remain unpaid for that duration of time. Another element that is different between last year's regulation is COVID sick leave interaction with exclusion pay. Previously, an employer was allowed to require an employee to use their sick leave before being obligated to pay exclusion pay under Cal-OSHA's current ETS. This new regulation, however, takes the opposite approach. The legislation states that an employer shall not require a covered employee to first exhaust their COVID-19 supplemental paid leave under this section before satisfying any requirement to provide paid leave for reasons related to a Cal-OSHA ETS exposure. What does that mean? Well, take the example we have here. Employee A came into work while experiencing symptoms and was in close contact with employee B, who is unvaccinated. The next day, employee A reports to HR a positive COVID test, and it is found later that the employee A's wife tested positive before him coming into work. Since employee B is unvaccinated, was in close contact with employee A, they must be excluded from the workplace, i.e., quarantine, for a minimum 5 days before they can return to work. Employee A will also be excluded from the workplace to complete a 5-day isolation due to their positive result. So, how will each employee get paid? Well, employee A is not eligible for exclusion pay and would need to request hours from their COVID supplemental banks to receive wages because their exposure is non-work related. Whereas in the reverse, employee B is entitled to exclusion pay for the duration of their absence because they were excluded due to a workplace exposure and cannot be required to exhaust any of their personal time banks, including sick, PTO, or COVID time during this duration of leave. Are there business reimbursements for this regulation? The simple answer is no. While the governor and legislative leaders have talked up tax credits being part of this agreement to bring back sick leave, they have not referenced any specific details as to applicable tax credits available, nor have they provided any dollar-to-dollar reimbursement like they did last year. This agreement did restore, however, some net operating deductions for corporate and individual taxpayers with businesses, and we do advise that you consult with your local tax advisors to find out more about what you might be eligible for. So let's recap. This legislation is once again in play, and businesses must get organized to make benefits available for employees. How do you do that? Well, determine your payroll documentation route. Can you add a line item on the employee's pay stub, or will you be providing a written addendum to their pay stub? Determine eligibility and identify those who are potentially eligible for retroactive payment and prepare to address those requests as they come. Collect the necessary model notices and post those in your workplace and/or distribute via email for those that telework in your business. And finally, develop a process for handling sick leave requests from now until the end of September to include training your HR management staff on how to process the appropriate documentation and other applicable processes attached to your policy. For more information, we have included several references for your convenience. And as always, should you have any questions, please do give us a call. Thank you and good luck.